This is our Forex blog for June 22nd, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We have the real-time histogram, real-time statistical strength on the top. This is made up of 5 of our best statistical tools. 3 of them measure the direction. In this case, the New Zealand is moving versus their other pairs. And 2 of the 5 measure the intensity. So anytime the majority of New Zealand pairs are going up and going up with incredible intensity, you're going to have levels of green at and above the dotted white line here. Underneath that, you have the 15-minute trend, hourly trend, daily, weekly, monthly. The more time frames that are up, or at least are not, blood red against the real-time trend, the better off you're going to be. And you have also, this is our currency meter that allows you to sort it from strongest to weakest. And it will flip them. The New Zealand's the strongest, and the hourly trend's going up against 100% of other pairs. CAD's very strong, Australian's strong, the pound and yen are the 2 weakest. So basically, our 3-step easy Forex trading system is step 1, use the currency meter to find the strong ones. Today, the New Zealand, pretty much all of them are up from 6:30 onward. The yen's one of the weakest ones after 9. Before that, the pound was quite weak. You could be looking to sell the pound New Zealand, or once the yen became really weak right here, buy New Zealand yen pairs. So you bring up the New Zealand yen, and I'm going to remove the signals I have on here because I've been working on them in another version of our software, and I've enhanced them dramatically. We're going to be releasing a new version probably early or mid next week. It's still going to be called FX Trade Signals, but I label them different just so I can test all my different code. Once you know a currency is strong, you're looking basically to buy. And so here's the first buy signal. You can wait for the trailing stop to get in, or if it's in the middle of the range like this, as soon as it goes 1 pip above the bar's high right here at 25, you get in. You can see it wasn't the biggest profit in the world. This was kind of just a choppy up move. But you can see the clear direction was to the upside, and even on a low range, low volatility, relatively choppy day like today, you saw the market go up 15 pips here, 8 or 9 pips here. This last one went up 30 pips. There's plenty of opportunities to make money trading this strong currency. Earlier last night, you can see the Australian was pretty weak on all time frames except for the weekly and monthly. If you're a real-time trader, all you really need is the real-time trend. It helps when the 15 and hour lays up. That's pretty much the minimum that I look for. I want the daily trend at least not to be strong, and this one's already down and it's weak. You sell that versus the super strong dollar at the time. It's strong on all time frames for the most part. So we're looking for Australian dollar sells. The first sell signal today really happened right here. The market was in a really choppy phase. I have a signal that looks for, basically up down patterns where there's not much directional bias. The trend is clearly down, and it goes short right here. You would have been short right here, a pip underneath this bar here at 45, and the trailing stop got you out here at 18. So it made 26, 27 pips. And usually once it comes down and goes sideways like this, if you draw your fibs on this, it's usually going to stall at the 1.382 fib target, which it did. So I would have probably got out of half my trade here and the other half here. Pretty much the profit target or the exit price would have been halfway in the middle here at 16. Short this at 45 right here. It always helps when you get a sell signal for the price to break through the support area. We have the 50-day moving average, 10-day moving average. These are very likely to be support, and when they're not, the price is likely to go to the next area, which is a decent number of pips away. If you use our trade signals in combination with the real-time statistical trend tools, which it does not use, and when you look at the next area of support or potential profit target, if it's 1.5 to 2 times bigger number of pips away than what your risk is, your odds are dramatically higher. If you take only those choice trades, you're going to do a lot better. For example, this trade right here, sell signal, the lower containment band is a potential profit target at 11. If you sold this at 20, you might make 6 or 7 pips. If it continues down below that containment band to the next major area of support, that's nice. But you're obviously better off waiting for at least a pullback before you get into the trade, 38 to 50% Fibonacci area. So here it comes back up, and if you look for a sell here, you can see it pulled back. Now I've been experimenting with a bunch of different tools in combination with the signals. Obviously the real-time trend tool is very helpful. Today was a very choppy day, but you never know that until after the fact. One thing that I found was useful in my own trading, I'm going to come up with one that's a little bit faster than this, but just the old stochastics. If you wait for a sell signal when, any kind of momentum-based tool, obviously you look to sell stochastics when it's above the 80 level and flips. You look to buy it at the bottom when it flips. If you see it above this 80 level and you get a sell signal, your odds of it going down is much higher. Now, if it goes down and it doesn't have as much weakness as it had before, you can see it's oversold right here. You get out of your trade with at least a small 3 to 10 or 12 pip profit. Whereas this trade right here, notice it wasn't quite at and above the 80 level, which means this wasn't enough of a pullback to make it a really high odds trade. And that's all I'm trying to say. When the market's in a choppy range like this and it just finally makes its move, that's a different situation, but you can see it, stochastics when the market's kind of chopping around don't work as well as when it starts to make a decent sized move. You can see this pullback right here. You have two sell signals. They're both when the stochastics at the upper end of the area here. Now, if you don't like using stochastics, you can also use a MACD as well. And, I haven't really used the MACD. I use the stochastics because it's a little bit different. And there's also the RSI as well that shows overbought, oversold. You can set the number of bars there that you want. But basically, in a nutshell, if you look for sells when the stochastic or RSI is about to flip, or the RSI is up near the high of the oversold area right here, you can see the sell signal. A few bars later, it was up at that level, and then the market reversed. Whereas, this first trade right here, the market's in the middle of the range. It hasn't pulled back enough to really give you high odds of the trade. Now, the same thing goes with counter trend trades, especially when the market's weak like this, but then it reverses and starts moving its way up. You get a pullback right here. Notice down, sideways, down. It has basically pulled back enough to make this buy signal, likely to at least go 5 to 15 pips your way and make it worth taking a trade. So I'm going to be working on a much faster, much more robust, much more statistically based overbought, oversold indicator that we're going to use in combination with the range bar patterns and in combination with the build your own trend statistical momentum tool.